Welcome back. Well, this is Corporate Radar, and as promised, let's get to our next corporate, Arvind Fashions. Well, the Q4 revenue growth has remained steady. Margins have improved a little bit, though there was a loss of around 90 crores or thereabouts. Mr. Kulin Lalbhai, the Vice Chairman at Arvind Fashions, joins us on the show. Hi, Kulin. Good morning. Good to see you. And as always, well, the high single-digit momentum continues even in Q4. But how are the trends? How is demand on ground? Couple of months, we're already into the new fiscal. For the year, can we see double-digit revenue growth? And also in the past, you've been speaking about this 100 basis point improvement in margins. It holds through even for FY26. Margins will be 100 basis points better than FY25?
Yes, FY25 was a very good year for us. We accelerated our growth significantly. We doubled the growth of the company. And I think we've got very exciting growth levers ahead of us. I think we are accelerating our square footage addition. Our adjacent categories doing very well. We have clocked 5% like-for-like growth annually, which shows that the core franchise itself is very healthy. We have been increasing our marketing investment. So we are seeing higher demand for our brand. So I think in all, we are quite excited with the trajectory, and we do expect a further acceleration in our growth rate as a company. We want to get into the double-digit growth rate, as you mentioned, and we hope to achieve that in FY26. As far as the bottom line is concerned, FY25 was again a very good year for us. We grew our PAT by 70%. The Q4 loss that you talked about was just an accounting one-time write-off due to a DTA, where we moved from a tax rate of 35% to 25%. But if we take away that accounting adjustment, our bottom line has gone up very, very well last year. We've had 100 basis points improvement in EBITDA. And we hope to continue that similar trajectory. Last 3 years, we've been doing 100 basis points improvement every year. And we intend to continue that momentum.
Kulin, hi, good morning. What is the guidance then for FY26? What should we expect?
Yeah, so we are expecting, the demand situation to keep gradually improving. I think the announcements of the budget and the cuts in interest rate will start showing up more significantly as the year progresses. But as I mentioned, we ended last year at around an 8.5% growth rate, and we expect that to accelerate into the early double digits this year.
Okay, early double digits this year. Or just since we're talking numbers, let's get the margin bit out of the way, and then we can dive into operationally what's happening. Would you want to guide us with that profitability?
Yeah, so, our guidance has been around 100 basis points. We've been investing heavily in marketing. So last year, we invested almost 40 basis points more in marketing. We intend to do that again next year. But even after that, we hope to get close to 100 basis points improvement in the margins as well.
Okay, all right. Kulin, the adjacent categories, footwear, kids' clothing, innerwear, I think they contribute ballpark close to around 20%, right, of your mix. Could you tell us what is the profitability of these segments? And also you could tell us, as a percentage of the pie, what does it increase to?
Yeah, so it's around 20%, as you mentioned. And if we take the whole basket, the profitability is almost identical to our apparel franchise. So this is not, margin dilutive in any way. The growth rates are much higher than the core franchise. So we grow this business at close to 20% as a basket. So over time, its share in our total revenues will slowly inch up.
Okay. And on the footwear side, I remember exactly a year ago, you'd given some numbers on footwear in terms of where you'd like to be. Would you like to update that, especially for footwear? What's the size of the business that you can do in a 26 beyond? Just some sense.
Yeah, so we are now going to be larger than a 300 crore business. It had slowed down a bit in the last 15 months because of BIS challenges. Now those are behind us. So the supply shock that we had has receded, and we'll have full supplies as we exit this quarter. So we are very bullish that growth will move back to 20% plus levels in the footwear franchise. So we are aiming to become a 500 crore footwear business very soon.
Just one point. This early double-digit growth that you said for FY26, is that contingent on underlying demand recovery as well, or I mean that'll be an extra push if it comes through? Because it's not new, but you kind of constantly hear that flush over the last couple of years, which led to a lot of spending, retail consumption, etc. That is starting to peter out. Maybe these tax cuts, etc., will help, but who knows? So I just wanted to get a sense, is that if it comes through the underlying demand, the consumer is starting to feel better and starting to spend again, will that be extra, or is that baked in what you told us?
So we are assuming reasonably muted demand conditions. So when we have built our growth plan for the year, we have not assumed a very large change in consumer sentiment. But of course, the range could change by 1-2% depending on the market conditions. But we do hope that even in challenging conditions, we will grow more than we did last year.
Any of your brands you're particularly sort of bullish about? Anything at an inflection point? We've spoken in the past about brands like US Polo, etc.
I think different parts of the portfolio are seeing different kinds of excitement. So US Polo has crossed the 2,000 crore mark, which was always an important milestone for us. And we've invested very heavily in that brand. So we've got a great brand ambassador, Padmanabh Singh Ji from Jaipur. He's our brand ambassador, very brand relevant, as he's also all about the game of polo. And we've been investing very, very heavily in making the brand young and exciting. Our new formats are much larger formats with a full lifestyle presentation. Very attractive like-for-like growth happening in that brand. So I think that's a breakout brand for us. Tommy CK have amongst the highest profitability profiles in the market, and they dominate the price point, and they continue to go from strength to strength. And even Arrow and Flying Machine, where we've been carrying out a turnaround, are showing a lot of promise. And the base there is small. So on that base, there is a lot of potential they have as well. So I think across our 5 brands, we're very excited with the current platform and where we can take these brands.
Okay, all right, Kulin, we'll leave it there. Thank you very much for joining us, and we wish the consumer does feel better and underlying recovery also comes back in addition with what you're building in terms of your own steam. That's Arvind Fashions with the perspective on the business. Early double-digit growth for FY26, 100 basis point improvement in profitability. Those are some guidance numbers.